Welcome back to Stock Tricks with Nick for this week's trading recap from December 14th to December 18th. As you can see here, I had a great trading week. I think if you're trading breakout stocks, it was pretty hard not to have a good week, but this is a little bit special because it's my best week on the year. So plus 8% for just a little bit over $3,000. Leave a like if you also had a winning trading week. Today, have some notable winners to go over. Now, these are not just from this week alone. This is from my entry point to either the current price right now or where it exited, but have one winner over 53% or at 53%, another one over 40, and a few others that are really strong. And we're always keeping our losers very small. HIMX 4.6, TXG, we'll be covering that in more detail later, 4.3, and then NOVA 1.2%. If you're new to the channel, we do these trading recaps on Friday of all the stocks that I trade. On Sunday, I put together a breakout watch list. And then during the week, either Tuesday or Wednesday, we do a what's called midweek movers, where we update that breakout watch list. And it's a live stream. So we take a look at any stocks that you guys want to see using the comment section of that video. So if that's something that you're interested in, please subscribe to the channel and give me a follow on StockTwits, Twitter, and TikTok. All right, let's jump into the agenda. I'll be going over a quick market recap. How did the indexes do? We'll go over the Sunday breakout watch list and the watch list that we put together Wednesday night. How did that compare to the market? Look at my open positions and a breakdown of some finished trades. Quick disclaimer, this is my own personal trading account, my own personal opinions. None of this is financial advice. This is all for educational purposes only. Trading comes with financial risk, so do your own due diligence. All right, so this week in review, S&P 500 up just under 1%, 0.79. QQQ's much stronger showing, up 2.72%. Dow Jones is still lagging behind a little bit, plus 0.32%. And then FFTY, which we've looked at in the past, we'll look at again in a second here, finally breaking out of that chop box, up 5.22%. That's much more, correlates much more with the stocks that I trade. So that's the IMBD top 50. All right, so let's jump to the chart to go over some of those. We have S&P 500. And you see here on the 14th here, this is Monday, we gapped up at the open and everything kind of pulled in. So not a great day for the market, just because it's hard to buy on those days. You don't want to be buying into a gap open, especially on a Monday. Reminder, we did get the vaccine got approved over the weekend, so that kind of played with that gap open. And then from then, just a nice strong uptrend through the week. And then on Friday, we had a pullback, and that rallied into the close to continue to close above the 8-day exponential moving average here. Next, we have QQQs. And with QQQs, let me hide the trade history for now. You can see same kind of story, except this closed a little bit higher than the S&P did on Monday, rallied to close over that 8-day exponential moving average, and then just continued on. Nice, strong uptrend throughout the week. Again, that's 2.5%. And we did have a pullback today, but rallied into the close. And you can see it touched right off that 8-day exponential moving average. Dow Jones, DIA, much more of a laggard than the other two. You can see this is trading just in a pretty tight range through here. Bounced a couple times off the 20-day simple moving average. That's this green line for anyone following along for the first time. And today closed right on that 8-day. So not much movement with the Dow Jones. And then going to the FFTY, this was the IBD top 50. And you can see this is the chop box that, well, what we were calling it, like through here. From September 2nd, we had that pull down in all the tech stocks and most stocks at that point. rallied up. We get that the election rally, vaccine news that pulled down a lot of the growth stocks because a lot of the growth stocks at the time that were leading were stay-at-home stocks. And then we rallied back up, had another flush on Wednesday. You might remember last Wednesday I said we're finally out of the chop box because it looked like we were just about to exit. Got pulled back again, but then this week, nice clean breakout, tons of volume coming into those stocks, and you see relative strength compared to QQQs on an uptrend. So that is all going well with the market. Looks to be in a strong uptrend now. Now let's get to the two watch lists we had. So Sunday's watch list, typically I show this largest winners from Friday's close, 5%, and then the largest losers, more than 5%. But we had to limit it at 10% or more this week because we had 1, 2, 3, 4, 5, 6, 7, 8 different stocks close above 10% from the previous Friday's close. Picked a ton of winners. You can see here the average gain or loss, the average gain, if you averaged all the returns from I think we had 14 or 15 stocks on my breakout watch list, was 9.63%. The market during that time, 1%, 2.5%, 0.3%. So we crushed the market with our breakout watch list. If you want to look at that, I'll link it above right now. But let's take a look at a couple stocks here in more detail. Now that we've seen some breakouts, it's good to look back at the chart, see what caused that breakout, what were the indicators leading up to that movement. Not because we're going to buy now some stocks that are already extended. We're not buying extended from a base, but to teach ourselves what leads into a breakout so we'll be ready for the next one. So we're going to be covering REGI, AMSC, Shopify, and CYH. We will cover the losers. One thing about my channel is I always cover my losing trades as well because I think there's a lot of value in going over what you did wrong. And everyone has losers in trading. It's just important to keep those losers as small as possible. All right, so let's jump back to the chart. We got REGI. So this we were looking at a nice, let's see, starting to base here from October 12th to just about December 12th. So 2 months of basing after a really strong move up off the 200-day simple moving average of 188%. You can see that in the upper right-hand corner, anytime I draw a line, what kind of percent up or down it is. So that's 188% from that bounce there. Then pulled back and started creating that base, 17%. Had this nice flush under the 50-day simple moving average. That's this red line. So 26% from the high of the last rally. Not too much, but enough with this day to shake out a lot of stops that were probably set just under this previous low. So when we're trading stocks, we love to see, if we're not already in the position, we love to see stocks that have those undercut of previous lows because it shakes out the old traders. Anyone that's in the stock have bought at a higher price, probably have closer stop losses, or probably have further stop losses and more likely to run from there. So you can see this range tightened up. Volume got a little bit lighter through here. We got one more flush on October 7th here under the 50-day, immediately rallied back to close right in the middle of the 50, the 20, the 8-day exponential, all throughout that range. And then this was this was last Friday when we called it out, and we did get a gap open, but it returned, undercut the previous high, and then rallied back and closed slightly higher on Monday, but tons of buying volume on Monday. Great sign. Follow through Tuesday, follow through Wednesday, Thursday, and Friday. You like to see these long lower wicks in the chart because that shows that sellers came in, sold down the stock, but there were enough buyers to push it right back up, and that shows good relative strength. So this was a very strong winner from the breakout watch list from Sunday. Next we go AMSC, and I did not personally take this trade, but this next one, AMCS, I did. Let me throw on my trade history so you guys know I'm not lying. I'm always going to be honest. If I share my winners, got to share my losers, and I do that. I have done that in past videos. This just so happens to be a very, very good week. So AMSC, very strong uptrend. You could see 200-day, 50, 28, all in the correct order. What was this off the lows? 300% kind of off the lows there, and then had a nice mini VCP pattern, volatility contraction, where the first pullback came on 13%, next pullback came on 8, and then basically just tightened up through there. You see it's riding that purple line, which is the 8-day exponential moving average. And then I was buying with a break over the previous highs here. So 2050, I think I got filled. 2047, I got filled at. Then it kind of squatted a little bit, but nothing, not even close to my stop. Next day, we had great follow through. You can see volume picking up here. Sold some into strength there, sold some into strength yesterday, and holding a little bit. Let's see, what am I? Holding a little bit less than half my position now, or a little bit more, about 75% of my position. So that's AMCSC, sorry. You can see nice volume as we extend higher. That was on the watch list as well. Shopify, this was a very long base. You could see this one started basing out in like July, right? Yeah, July 1st, 2nd or so. So for 5 months now, it's just been trading sideways, very choppy. But finally, you see a rally up, and now you get the 8-day above the 50, and the 20 also crossed over the 50 at this time during this kind of, I guess, cup and handle, the most recent cup and handle. It's been trading in a channel, but volume got very light in that handle area. You could have bought at this lower cheat around 1085. I waited for it to get a little bit higher, just because the higher you are in the range, the higher probability you have of a winning trade. But if you do get that lower buy, you're more likely to be stopped out. But if it does run, you get that lower entry point, so more profits. So that's just, you have to weigh your risk reward on that. I went with, because everything else was working this week, I went with a little bit later of a buy. I got in at 114-ish. Yeah, 114. So kind of right through here. Look at all that volume. That's not me and you buying. That's institutions, maybe a couple institutions buying with that break after a 5-month base and a very large lead up through to that 230%. This was one that a lot of groups were watching, and we took the trade at around 114. Sold one of them into strength there and moved my stop, half my stops to my entry, just to protect the risk. Already have some good profit. And the one losing trade from the breakout watch list that broke the wrong way, and unfortunately I did trade this one, was CYH. Very nice VCP pattern through here, 31%, 17%, and kind of 7% after a 127% move higher. So looked like a quality setup. Sometimes quality setups break to the wrong side. That's fine, as long as you're sticking to your risk controls of having stops on everything. You're going to cut your winners, you're going to cut your losers quickly and let your winners run. That's exactly what I did here. Bought with a break over the previous high from December 10th. And then this actually got going on Monday. And I think we were up about 6% on the trade at that time. And then that day it reversed. So I moved half my position stop to my entry point, because after something gets out 6%, I don't want it coming all the way back and then stopping me out full on the trade. So got stopped out of half at my entry point and then half at my original stop. So because I was able to move that up, because it started going, I took much less risk on the trade. And this kind of candle, that's a gross candle, lots of volume, lots of selling, and you could see continuation lower. So even though this was a great trading week, a lot of breakouts were holding. If I just didn't have any risk controls, this would have been a big loser. But because I was just as aggressive adding names and just as aggressive with my risk controls. This was a minor loss, did not even make a blip on the portfolio this week. All right, next we have the midweek movers watch list. So from there, we did that on Wednesday night, so only Thursday and Friday of trading. We did have 3 stocks, FCEL up 10.1%, LQDT 8.8, and ZS up 6.4. Those were the 3 over 5% from that breakout watch list. And the only loser we had from Tuesday, or I should say Wednesday's close, sorry, is 1.8% on SPT. So our average gain loss for all the positions that we talked about was 2.9% gain just from Wednesday, so Thursday and Friday's trading period. And during that time, the market was S&P was down 0.25%, QQQs were plus 0.35, and Dow Jones was flat. So even there, we were picking the winners. So that's good to see. Let's take a look at FCEL and then SPT. So FCEL. This is one that I did take a trade on. Very nice breakout through here. That's when all the EV stocks were going nuts, 320%, tons of buying volume coming in. Did have this kind of blow off top that we talked about in previous videos. I made some money shorting that at that time, and then the next kind of blow off top as well. So this has been a good name for me. But we had that first pull down, I guess from the high to the low, 43-ish%, and then the second pullback, 18%. And then you can see the 20-day simple moving average starting to run up and provide support. On December 14th, the low of the day bounce there. On December 16th, the low of the day bounce. And that's after that second bounce and this starting to coil very tightly. That's when I put it on my watch list. I bought on Thursday with a break over the previous day's high, or I bought a third of my position with a break over the previous day's high, the rest 2/3 with a break over December 15th's high. And then today, as we started extending, did take a portion of it off into strength, moved half my stop to my entry, and now this is a winning position. We're going to let this run a little bit, but if it immediately reverses, stops me out, I already have some profit booked. So with everything going nuts, everything breaking out, I was just as aggressive, taking some profits off the table, moving my stops up to keep the same kind of level of risk as I was adding new positions on. So that's FCEL. I really like the volume coming in through this breakout. And again, that 20-day simple moving average running up is a great sign. And now we're over this kind of volume shelf too, so very little resistance up top through here. And let's go to the one loser from the midweek movers watch list, SPT, and only 1% down. Today was down 4.2%, but you see on Thursday we just immediately kind of took off, squatted again. This has been a pretty choppy stock, but it is coming from a nice base and after a very strong run up. So that's why I threw it on the watch list. Still could tighten up. Maybe it has another kind of pullback and gets going here. So I have this on my overall watch list right now, but I am going to give it some time to tighten up again. But today we just had lower highs, lower lows, and still closing above the 8-day exponential moving average. So still might be in an uptrend here. All right, let's get back to it. Here are the stocks that I'm currently holding. So right now I'm 82% net long invested. I have 97.7% of my money in long positions, 15.7% in short positions. So that's where you get that 82% net long. Right now, 17 open long positions. You can see here some of the larger ones. I do have a lot of smaller names. You can see 9 other stocks that make up 22.8% long. That's just because I've been taking profit on a lot of winners that right now I have a very small position size on some of them, and we're just getting out of a very choppy market. And during that choppy market, I was putting on trades at most 5% of my portfolio. So now that we're in an uptrend, now that I'm at my equity highs, I could be a little bit more aggressive with my position sizing. And that's where you get the JMIA of 9.4%, Fiverr 9.2, GRWG 7.1, and I've already taken some profits from that guy. So now that I have profits, now that I'm at the highest equity curve that I've had, so highest account balance, I can be more aggressive with the position sizing. But I am going to kind of bleed off some final winners there. I do have two short positions, 11.1% short in Dow Jones, and then a 4.6% long in SQQQ. Just to keep hedging some positions in case we get one day where it flushes. I do have kind of a buffer through that. So from this list, I wanted to go over JMIA, GRWG, and SPWR. So JMIA, this one put on the watch list yesterday. Nice triple top right through here, or I guess quadruple top. So this high 40, 90, 40, 78, 41, 40, 92. So basically all right around the same area. This had a really, really nice rally up to that point, 373%, tons of power in the name. You get the buying volume exploding through, and then things get pretty quiet after it pulled back here. Volume got nice and quiet. This kind of just gradually moved up. Its 8-day exponential moving average. Did have that one day where it tested that breakout point, pulled back right to that 8-day again, another test of it, and then Thursday's inside day really set up the trade for me. Inside day came on the lowest volume after a heavy buying volume day. So again, lots of buyers, very little sellers, setting up the trade. And what I loved about this was a lot of things were working earlier today. This was actually not. You see, we opened just slightly in the green, and then we actually pulled down, broke under the previous day's high. So that kind of takes a lot of eyes off the trade. Maybe stops some people out with like extremely tight stops. But that undercut of the previous low after an inside day, that set up the trade perfectly. So I bought with a break over 41, and you see it's my largest position right now. I did sell just a little bit into the upper wick here to get some profit on the name. I have not moved my stop yet, but with a name that's moved 370 something percent and a really nice setup like this, I want to give it some time. So that's JMIA. Next we have GRWG. This was another name that has been rocking this year. You see a nice 150% move up here, and then very frustrating kind of channel trading, fake breakout, pulled back, and then it just exploded higher. Didn't get caught with any of that. Unfortunately, didn't catch that name. But even after something explodes higher, I put it on a watch list, needs to calm down, something like that. And after we start to get a pullback, I start noticing the 8-day or the 20-day simple moving average starting to catch up. We have this undercut of the previous low here. So if this undercut wasn't enough, we did have a gap down day that undercut that low. So knocks a lot of the stops out. And then what I liked with that, it rallied up and closed right near the high of the day. And then again, the previous day to my entry, so I entered on Tuesday. It was an inside day on very little volume. We're just above the 20-day simple moving average. That's provided support a couple times. So I bought with a break over this green candle on December 11th high. And then it just immediately started working for me. Strong breakout the next day on higher volume. Sold some right at the end of the day into strength. My stop is at my entry now. I was considering taking some off today, but I was doing enough of profit taking with other names that I wanted to keep this going because, again, this is a very strong name, good setup. So we'll see how this goes. That's GRWG. Next, we have SPWR. This is a name that I've been trading for a while. You can see nice uptrend, 250, 28, all in the right order. I got stopped out of my original position right on this day, but and tried another trade here, got stopped out. And that just goes to show you, if you get stopped out of a trade, that doesn't mean that the setup's gone forever. You're just sticking to your risk controls because maybe you get stopped out, and that's a good thing because it just keeps on crashing. You have no idea what's going to happen. If if my positions aren't immediately working out for me, it's better that my money is in my account off to the side in a cash position because there's no risk there. Every time your money's in the market, it's at risk. So to, I guess, as we coil up here, we had a pivot through this area, and I just bought with a break over the high from the day that I got stopped out at. So 22.69, bought on Tuesday, immediately started working. I put my stop at the low of the day on that day, so it was a 2% stop, very, very tight. So I immediately got multiples of my risk on the trade. So sold some into strength, sold some more into this upper wick today, but really good volume on the breakout days. On the one red candle, very light volume, looks to be a strong name. A couple other names that I wanted to go over. MGNI. This is one that put on the watch list earlier. It's a high tight flag, so moved over 90% in 8 weeks. Sorry about that. Moved over, 100% in a couple weeks. Pulled back only 19%. Again, to that 20-day simple moving average, undercut a lot of the previous lows through here. That set up the trade. And then I bought with a break over that high. And then on that day, it just kind of sat. Nothing really going with that day. And then today, we had that really strong breakout, up 17% and up 5% in after hours. I took some off after hours as well. So sitting with good profit, but with this type of volume on a breakout, I don't want to take the trade off entirely. So MGNI. Next, we get PRLD. This was a name that I traded IPO high tight flag. So kind of the best of both worlds there. We had a strong move up 100% to the highs, pullback of only, 22%. And then basically a VCP setup too, because you had that pullback of 20, 22, 24%, whatever. Another pullback of 12% and a third pullback of 8.5%. So every pullback getting tighter and tighter, volume getting nice and light. Bought with a break over the previous day's high at 51.93. And then this just monster takeoff. I'm working my way out of the position. You can see some sell flags through here, selling into strength, moving my stop up. At this point, I have maybe 15% of the position left on. You get a red candle close outside of the upper Bollinger Band on high volume. That's usually a sell signal. So you could see I did take off a lot of position today on that. But really nice setup, really clean entry, and you love the ones that immediately work for you. They don't all work like this, but this tight of a setup on an IPO high tight flag, and I put good position size on this. I think I was 10% size on this. Two more for you. NOVA, and both of these were losing trades. So we talked about all the winners. Great for you, Nick. Let's talk about some losers. Let's learn from them. NOVA. This one, another strong name. 250, 28, all in the right order. This pullback was only, I think it was 15%. Let me check. 20%. So a little bit more than 15%. But you had, look at this, a couple of days where we undercut the previous low, that undercut the other lows. So figured all the stops would be knocked out. We had a couple of days of very, very quiet selling volume, set the trade up. And I bought with a break over the high of these 2 days at 39.10, 39.15, somewhere around there, 39.15. Immediately started working for me. So I took some off in the upper wick. And then the next day, because this was on Tuesday and I didn't have the actual profits going that I have now where I was at equity highs, I was still off my equity high by maybe 6%, 5% at that time. So I still had to be a little bit conservative with my trades. So after it exploded higher on Tuesday, put my stop to my entry point, and unfortunately we got stopped out. And then it immediately just kind of rallied back higher. And then Thursday, we had an inside day. It looks like today we squatted. So this is still a very choppy chart, hard to trade, but I wouldn't do anything differently at the time where I was still 5% off my equity highs. But if I was sitting in my position now where I have a lot of profits to play with, I would have kept my stop a little bit lower where this wouldn't have knocked me out. So a couple things to take away with that chart. You don't like this type of volume on the sell day either. That's a little bit concerning. Maybe some of it's in running it back up higher, but with all the charts, with all the breakouts, we can be pretty selective with what we're trading. So we always want to pick the best charts. And last was TXG. Look at this candle, and you can't even really see it on here. This is an absurd candle. Let me just zoom out so you see the entire chart. Really strong uptrend, all the good things that we talk about. Bought some with the breakout here, got stopped out of half. Actually, I took off half after it rallied, added it back after we broke over a couple days highs, and then thought this was just taking off because finally this coiled nicely, broke out, was looking strong, and then it just started selling off rapidly. So after it started selling off, got basically to the opening price of the day, I switched my limit sell or my stop loss to a limit sell order, tried to sell it at a limit, and then it just kept on crashing down. So I had to change it to a market order, and then I got filled at basically the worst price, 141.21. Terrible, terrible fill. And I got filled at what would have been even worse than my stop loss, which double hurts. I was trying to be proactive by switching to a limit sell and getting it basically when it was 0%. Let me see if this chart will even show it. Yeah, look at this. This is the red candle that I got stopped out at. Well, not even stopped out. Tried to do a limit sell, and then within 15 minutes, even like I could probably do it to 5 minutes, but this just terrible candle dropped 8.7% in 15 minutes. I don't know. Maybe there was a couple things that I could have done differently. No, in 5 minutes. In 5 minutes, it dropped 8.7%. So kind of take away from that is if something like that happens, maybe give it a couple minutes to see if it bounced back. Maybe sell some instead of the whole position. But me trying to be fancy with it, move my stop up, did not work out. I probably lost maybe $100, $200 just on that kind of interaction. So that was the big loser of the week, but hard to be mad after the week we had. Again, plus $3,000 on the week, 8%, best trading week of the year. If you enjoyed this content, please leave a like and comment below what stocks that were the biggest winners for you, because I want to do my homework. I want to be prepared for the next week, and I'm always looking for the winning stocks. So comment those below. And once again, subscribe to the channel and follow me on StockTwits, Twitter, and TikTok. Have a great weekend, and see you Sunday morning for the Breakout Watchlist.